to their personality and temperament. So figure out a path that works for you personally. And thanks. All right, well, let's go ahead and get this party started. So we're at 10:01. So welcome, traders. We're going to continue on with our Trading Month Ahead broadcast. I'm Ken Calhoun, your host, coming at you live here on March 2nd. It's already March, so welcome aboard. I do urge you to join at trademastery.com. Join, that's free. For the free membership area, you can go to trademastery.com/join and get access to, I update it about once a month or so with some free content. Be sure to look at my YouTube channel as well, youtube.com/tradingtelevision. So do feel free to ask occasional questions. I'm somebody who has done as much as 4.9 million in real trades. Tax return proof counts, right? Pay more attention to educators that actually back up what they're talking about with tax returns, because that's where the truth comes out, all right? Tax return proof. And commissions paid. Like I'm saying, a lot of people claim to make lots of trades. Mostly they try and pass off sim accounts. I'm a real trader. Look for how much somebody paid in commissions, and that tells you if they're a real trader or not, and how many trades they made. So if your trading losses make you or your family say, what the heck? Let's focus on what works better. All right, let's get underway. So our S&P is up in new highs. Obvious resistance. We climbed over the 200 SMA, and we widely expected, most of us market professionals expected a pivot off the 50 way back near 2600. That was a key resistance area. The market broke on through to the other side, and now we're up at 2800. So we're still in resistance territory. The market's been really quiet and choppy the last week or so because we're testing resistance, and we're up at a multi-month high here. So we're at a prior resistance area. 2820 would be obvious resistance for breakout continuation. I'm going to use 2770 or so as support, right under the 5-day low. The major support, though, is 2745, right at the 200 SMA. If we lose the 200 SMA, the market's likely to take a nosedive, right? And instruments like TVIX and VXXB and some of the other inverses that have been taking a beating during the market run up will come back to life and may be well worth trading. From a what's worth trading standpoint, if you're a day trader, charts like this BPTH one yesterday are really good. This is one that we covered in my live tradingtheopen.com chat room for members. I called it long over the 4, around 420. I said again over 520. Personally, I traded it profitably later in the day. I didn't want to chase it way up here, so I waited patiently. And this is a mean reversion pivot, right? That's when something runs up, it pulls back down to about the middle. It doesn't have to be exactly the middle. But if it bounces off a 50-cent marker, especially a whole number, so I waited till it got over 6. That'll often do a spike up. So it's what I call 1, 2, 3, wave 1, wave 2, wave 3, mean reversion pivot. You may see my article in Stocks and Commodities magazine on that topic. Anyway, nailed it. Another one my live room members got that I traded profitably on the first run up. I didn't retrade the second and third legs. Coulda, woulda, shoulda, right? If you second guess yourself as a trader, you're going to drive yourself freaking nuts. Buy support, sell resistance. That's what I did yesterday. Nailed it, but I didn't buy support again. But it did the wave pattern. We see this is a pivot trader's market. This is a pivoter's market. Buying the obvious breakouts often end in a fake out. Like, unfortunately, I didn't buy up here. That's like a breakout. Oops, you got stopped out. Oops, you got stopped out. Oops, you got stopped out. But you bought the pivots, you bought off the base low or the pivot or the second support line, you're in the money. And so this is a pivoter's market, just like when I trade TVIX. I was trading it successfully back on Thursday here and again on Thursday into the close here. Unsuccessfully yesterday. I got stopped out. Pissed me off because I was expecting another run up. But hey, I make stops like every other trader in the book. Anyway, the point is, instruments like TVIX, the VIX ETNs, will often spike up into the close. And so that's one time where it is worth trading between 3:30 and 4. So I always check the markets again around 3:30 and usually put on a trade or two to catch a bounce. And that worked out great Thursday, not so good yesterday. And also the pivot play here is good, where you get a breakout, you buy the major pivot and sell resistance. Pre-market high, buy support, sell the breakout into resistance. I think I got out, I'm using trailing stops. I got out a bit early there, but we got a pivot off the high there. Selling resistance and not buying new breakouts is the way to trade some of these instruments. For a swing trader's standpoint, one that my Swing Scans members got was this one earlier, ARRY. What I want you to notice about these charts, and I went to the time and trouble of publishing a really good popular article in Stocks and Commodities magazine on the importance of trading ranges. It's really, really important that you first qualify. People always ask, Ken, how do you pick such great rockstar breakout charts? Well, I'm always looking for the trading range and the chart pattern. What's more important is the math, the trading range. This is more important than this. Traders don't get that. This is a lot more important than that. If this, say, support was 20 and this high was 21, who cares? You're not going to make any money on a multi-month chart with a 1 or 2 point trading range. So first qualification is, what's the range? It's kind of like, look at it like you're hiring somebody for an important job. And, I'm in the process of recruiting folks for my social media. You look at years of experience, right? And what kind of depth they've got. What kind of wisdom and experience can they bring to the party? If they've only got 3 or 4 years, F them, right? But if they got 10 or 12 years, okay, now we're talking. Same kind of thing when you're looking for range and implied and historical volatility using options terms, and you're looking at directional price volatility. The trading range is the more important of the two criteria because that gives you a profit potential. Usually 50% maximum of that range is a good exit target. So if we buy over 24, the exit target, the price projection, is half of the previous 90-day range, right? It's like a 2 or 3 weeks swing trade. So this guy ran from 14 to 24, so it's got a 10-point range. So what's your exit target? Making you guys put your thinking caps on. Yes, I asked you a question. This is the part where you type in an answer. There's a 10-point trading range. These are all math puzzles. Trading professionally, doing millions of dollars worth of trades, is all about the frickin' math. It's a numbers game. The chart patterns are very secondary. Traders don't get that because most of the trading educators aren't real traders. I'm a real trader. I'm here to tell you. It's the numbers. It's the math. It's the P&L. It's your discipline and ability to execute the plan. The point is, back to the math puzzle, you got a 10-point range. If you're going to use 50% of that as your exit target, what's your exit target? If we buy over 24, best case, where do we sell? Give me a number. Kelly got it. Han got it. Mira got it. Mukesh got it. Phil got it. Joe, Walter, Wendy, Tom, Mark, B. You guys all got it. 29. Almost, Deanna. So 5 points. 23.75. I wouldn't buy it there. I'd buy, personally, not a trade recommendation, but I'm going to buy it if it gets over, say, 24.30. The point is, this was a pick for my Swing Scans members earlier. The point is, 10-point range, use around 50% of that range because you're not going to get the whole range. Sorry, there's no, hey, look, a unicorn. I don't think so. Inconceivable. To quote the Princess Bride movie with the villain fella, which is one of my favorite movies, The Princess Bride. Iocane powder. I've developed a tolerance. Anyway, the point is, you got a 10-point range. You're going to stick half of that on top, and that's going to be your exit target, 29. That also is in line with what I say about sell the nines, right? That's another article I published in Stocks and Commodities. So good call. You guys mostly all got it. I love coffee. I love money. I like traders. I like entrepreneurs. I like hardworking people. Specifics are what makes the difference. The devil's in the details. You do need to roll up your sleeves and do the correlation testing to figure out what kind of patterns produce the most money for you. Oftentimes you'll find it's different than you expected. That's why we have to go gather data. Back when I used to be a consultant of Fortune 500 companies, whether it's Ford or Sheraton or Chevron or other big companies that hired me to come in and help them improve their quality, statistics, and methodologies and planning and strategic planning and operations management and revenue and all the rest of that kind of stuff. What you're looking for is relationships between things that can make you money and also avoid things that cost you money. So what are the charts that make you the most money? And what do I not like about this chart? There's two things. I mean, I like this chart. It's a pick, one of my picks for Swing Scans members. I like about it is that it's got a relatively consistent uptrend. A lot of green candles. Not all green, but pretty healthy green candles. But what I don't like about it, as an experienced trader, this would be fine for a newer trader, but as a veteran trader, I don't like what? The hint, I just gave you a hint as to one of the most important things we look at on a chart is what? So what do I not like about this chart? Visually, it's a rock star breakout chart. And if you're a newbie, this would be a bunny slope type. I live here in Colorado Springs. I don't ski. I'll get on the gondola and go up to the ski shop up there and get some hot chocolate or whatever, but up in Aspen. But I don't ski. But this is a bunny slope chart. Right, you guys all got it right. Phil, Gary, Damon, James, Shannon, Walter, Ben, Norman, Kelly, Mark, Mira. Range is too small. Wendy saying I love green. Me too. Right? Yeah, Danny, you're right. That would be the stop price. You're at the 75. But the range sucks, right? 13 to 14. That's got a 1-point range. Chart looks good. And if you're a newbie trader, welcome to trading. Your risk isn't very much on this kind of chart because even if it stalls and drops and chops, it's going to go down maybe 50 cents before you know you're in trouble, right? Chart like this guy has a much bigger range, 13 to 23, 24. So it might go down 3 or 4 points. So you do want to make sure that you're matching your risk tolerance to the type of chart. And don't get seduced by, hey, it's a great chart. Yeah, it's a great chart, but what's the profit potential? On this, with the 1-point range, it's going to be 50 cents. So maybe you buy 14.5 and sell 15. Well, big whoop. Unless you're trading thousands of shares, P&L's not there. So match. Those are the kind of relationships you need to look at as an experienced trader, is the money flow and what kind of patterns match your own personal risk tolerance. Okay. And last but not least, here's a pick that my small cap scans members got. And that's Ruby. And you can see this guy ran from 3.5 to 6. Before we continue, just a quick reminder, before I forget, I do have a current sale on the live room. 3 months, only just slightly over 100 a month. I doubled the rate of my live room starting the first of the year because so many people, right, hundreds of folks joined the room over the months. And you can see, anyway, my live with real money trade examples. Look over my shoulder and see me do live real trades in my Fidelity SEP. And we cover morning gaps and breakouts, price action, momentum movers, day and swing trading charts, candlesticks, and tape reading. Another thing I just launched too, in addition to this, so that's at tradingtheopen.com. If you want to join my live room and work with me very intelligently, and I answer all questions, and I'm very helpful and honest and accurate and specific in my calls and what I try and accomplish with traders, try it out, right? And it's only, what, $3.97 for 3 months? It's like a $132 a month or something. And we meet Monday through Friday at 9 a.m. till 10:30 or 10:45, sometimes 11. So there's that. The other thing that I've got is a new course. And I just put this page together last night, so it's not too detailed. It's got enough information, though. UltimateTradingTurnaround.com will lead you to this page. I own that domain, too. I own hundreds of domains. One of my hobbies, eh? Anyway, it's only $97, and I've got 2 webinars coming up for how to turn things around. And you're welcome to send in charts if you register, and we can cover them during the events. I got 2 hour-and-a-half Saturday events coming up the last couple of Saturdays in March. So how to find and fix common trading errors. We're going to get back to the charts in just a second, I promise, but I wanted to do that. So it's only $97, and you'll get the recordings in case you don't feel like showing up live. And I don't blame you. I mean, frankly, I don't sit through webinars myself. I just kind of register, and then I will look at the video later kind of thing. So anyway, but these will be 2 hour-and-a-half long intensive workshops, and It's only $97, which is very, very cheap for me. 3 hours of training with me for $97 is a bargain, and I certainly hope that you'll give it some thought. The main focus on this, we'll look at best practices and how to re-enter after getting stopped out, and top patterns for our current markets, and then so forth. But the main thing I want to do is help you develop a personal action plan or turnaround plan to help you plug the leaks in your trading game and figure out what you're doing wrong and give you some fixes to test out. So hit me with your best shot with things that are troubling you, and I'll give you at least what I found help solve that problem in my own real trade. So anyway, this is a list of the kind of things that you guys had all told me on the survey you wanted help with. So I thought I'd make it a bargain price. So now registering. Go ahead. It starts in a couple of weeks. So you got a couple of weeks to decide. But it's at ultimatetradingturnaround.com. All right. Well, let's get back to our charts. Anyway, this is one of the picks from our small cap scans advisory service, and you can see it ran all the way from 3.5 up to, or educational service, I should say, ran all the way from 3.5 up to 6. So it almost doubled. And this kind of chart is best supported when you see a high volume gap that continues the day after. Now, what's the problem with this? That is a bearish. Fellow traders, what kind of pattern is that called? That's a shooting star, right? That's a shooting star, which is a bearish reversal pattern. For more on candles, be sure to learn exclusively from my colleague Steve Nissen at candlecharts.com. Don't learn about candles from anybody other than Steve Nissen. He's the original. He's the best. He's not, some like marketer that's out there every place marketing. He's the professional. Anyway, candlecharts.com for candles. We've got a webinar coming up, Steve and I, next Wednesday, the 6th. So coming up in a few days, this upcoming Wednesday, Steve and I are doing a webinar together. So be on the lookout for an email from us, probably Monday or Tuesday or something. Anyway, so shooting star, so we don't want to buy until it breaks above the shadow, the upper wick here, by at least, say, 10, 20 cents. So we don't want to ever buy within the body or the shadow of a shooting star. That'd be a bad trade. The stop, if you're in long, would be right at, say, 590, a loss of support. The long trigger would be somewhere over 630, preferably bake in a false breakout filter, maybe 640 or so. So you're looking at directional volatility, and you're looking at developing a trading plan that makes sense for you personally. And I've got to wrap here in a couple of minutes. Thank you for being here. Give yourself the chance to focus on strong charts. I didn't have a chance to go over the sector ETFs. Gold has been taking it in the butt, so our gold ETFs are down, like JNUG and Nugget. I trade JNUG on the way up. It's better price volatility. Now I'm trading dust, right? I was looking to trade dust yesterday. I didn't trade it yesterday, but I'll trade it next week, especially if it breaks north of 21. Anyway, that's the inverse gold ETF. Oil hasn't been doing anything lately, so I've been looking for plays in UWT and DWT for day trades, and they're okay for intraday trades on occasion, but they've been kind of sleepy. So we're going to really focus our energy instead on charts with big profit potential that have, like this. And that gets my vote for chart of the year so far, because I have not seen a chart with that kind of volume and that kind of consistent volatility going from 3 to 8. There's been a lot of small cappers that have run nicely this year, but this was the best of the bunch so far. So BPTH gets my vote. Anyway, y'all have been amazing, and your support, I appreciate it. It's great to see the numbers we're at. 55.49. Thanks for making these #1 in the industry. I do appreciate your ongoing support and involvement. I always promise, as always, to work harder and better and smarter and more strategically to help you accomplish your trading goals and develop tips and strategies and action items that you can start testing out in your own personal trades to hopefully make bigger winners more often a way of life. So see you guys in a month. For all of you who are Swing Scans members, we meet momentarily. And I will see you next time. So thanks for being here. Take care, and bye for now.